Hello everyone, you're watching Weekly Forex Outlook by Liteforex. Let's prepare for a great trading week. Firstly, we'll look at the chart of the US dollar index. American currency declined on Tuesday and Wednesday last week on the results of midterm elections. It turned out that Democrats managed to win the House of Representatives from Republicans, although Republicans still retained control of the Senate. This brings a minor political unpredictability in the United States. However, we can see that the USD was rather quick to recover and actually come close to 16-month highs, which were set at the end of October. The USD is rising because traders expect the Federal Reserve to keep tightening its monetary policy. American Central Bank actually confirmed plans for a rate hike in December at the meeting which took place last week, and 2 more potential rate hikes are expected in 2019. America has upbeat economy, the wage pressure is rising, so that's why the market is betting on higher interest rates in America and higher exchange rate of the US dollar in comparison to other major currencies. Another reason of strong demand for the USD is the increase in the market's risk aversion. There are several factors of that. Firstly, the US-China trade tensions, Chinese economic slowdown, Brexit uncertainty, and Italy's budget problems. All of this makes investors less eager to risk and more eager to prefer the safety of the US dollar as the world's main currency. This is the second reason why the US dollar is strengthening, why it may test the recent highs and go further up to set the new highs. Let's see what economic events await us in the upcoming days and offer opportunities to make money on Forex. To do that, we will go to liteforex.com and have a look at the economic calendar provided by the company. The first 2 trading days of the week will be rather light. On Tuesday, we'll pay attention to the labor market data from Britain. There will be a release of average earnings index and claimant count change, which indicates the number of people who want to receive unemployment benefits. Also, there will be a release of German economic sentiment index in Europe, and this release may have an impact on the euro. On Wednesday, we'll get a lot of important data releases like German GDP figures, like British inflation data, which is marked as CPI in the economic calendar. And also another country will release inflation figures, CPI, the United States. This release on Wednesday will be a very important release for the USD because now then traders expect interest rate hikes in America. They will look at inflation data because if inflation is rising, if CPI growth is getting bigger, then the Federal Reserve will be able to follow its plans and to raise interest rates. If inflation data disappoints, then it will be a reason to doubt the future policy of the Fed and as a result sell the US dollar. On Thursday, we'll get employment data from Australia, and it will be a chance to trade the Australian currency. Also, we'll get retail sales figures from Britain and the United States. There will be a statement, a speech of the US Central Bank head Powell, and on Friday there will be a speech of the ECB President Mario Draghi and final inflation data from the euro area. You can see that economic releases that we will have in the upcoming days are mainly from Britain and the United States. The most important releases will be on Wednesday and on Thursday. Inflation and retail sales, the figures which will allow us to estimate the health of British and American economies. Now let's return to the charts to see what trading opportunities will these data releases offer us. Firstly, I will check the chart of euro dollar, and we can see that the euro tried to break higher, tried to get above this resistance line we have on the chart, and it actually managed to test the level of 1.15 last week, but it quickly reversed down. It formed a long-legged doji candlestick and then reversed down. So it was a false break of euro dollar to the upside, and we can see that clearly still we are in a downtrend here. We are currently approaching the lower border of this wedge-like pattern, and its lower border is located around 1.1240 mark. The euro is hurt by Italy's budget problems. Earlier, the European Union rejected Italy's budget, and the country has to present the revised budget proposal until Tuesday. The situation is rather difficult, so the euro is under pressure. If we look at the weekly chart of the currency, we will see that now we are trading below 1.13. We are trading below the 200 period moving average on the weekly chart. And we are about to test some really lower levels, which may lead to a bigger decline and a new range of the euro. If we apply Fibonacci to the 2016-2018 advance of the pair, we will see that we are close to 61.8 Fibonacci level, which is below 1.12 at about 1.1185 mark, which is the next important level for the euro. Resistance is at the previous support of 1.13 mark, and previous resistance levels around 1.14 will be also limiting the upside. The British pound is trading in a very volatile fashion, and here the main driver for the British currency are different news which are related to Brexit. And although last week we spoke about the progress in Brexit negotiations, now the situation is not so clear because there is political uncertainty in Britain. The position of British Prime Minister Theresa May looks rather shaky. More policymakers may quit the British government. There are a lot of disagreements within the UK government itself. And less than 5 months are left until Brexit, so tensions are pretty intense. And this week we will surely get news flow related to Brexit, which will have an impact on the value of GBP/USD together with the UK economic figures and American economic figures. And we can expect that the currency pair will keep trading in a broad range with the upside around 1.31 and the downside around 1.2660. You can see that the week started with the gap to the downside, and it looks like we'll go in for lower levels of 1.28 and 1.27, where some support may be found, as still the market is hoping for positive negotiations, and the pound could reverse up. So these are the things we need to consider while trading the British pound. The US dollar is strengthening versus the Japanese yen. We talked about the fact that the currency pair managed to stay in this uptrend, and during the past week it managed to push higher. So now the natural levels to look at on the upside is the October high around 114.50 and the previous highs at 114.70 and 115.50 as the further bullish target if we manage to rise above 114.70. Support is at 113.70 and 113.10 level. The Australian dollar managed to reach the levels of 0.73 last week. Australian currency was helped by stronger than expected Australian trade data and a less dovish comments from the Reserve Bank of Australia. However, the strengthening of the US currency by the end of last week made the pair slide from the highs and close the week at around 0.72. So the candlestick we have on the weekly chart resembles a shooting star candlestick, and this makes it likely that the pair will try to retest the previous resistance and now support line around 0.7150. So much will depend on the market's risk sentiment and on the market's demand for the US dollar. Next levels to watch, the strong support is located around 0.7040, while we need to break above the Fibonacci level of 0.73 to get to the next Fibonacci mark at 0.7460. The same picture we see is with the Nzdusd dollar, where the pair met resistance at the Fibonacci level of 0.68 and is about to test 0.67 mark. The support is located at 0.6650 and 0.66, while the resistance is the same, 0.68, the Fibonacci level that guards the way to the next target at 0.69. Gold also weakened last week, affected by the stronger USD, and actually it returned close to the lower border of its channel. The border, the support is located at 1,200, and this is where there may be some new buying orders for gold. However, if the data from the United States surprises to the upside, the selling pressure will increase and this support will be vulnerable. Decline below this level will lead us to the next level on the downside at 1185. Resistance is located at 100-day moving average around 1215 mark. And let's also have a look at the US oil chart. Here we can see that there is some rebound from the 50% Fibonacci level, and oil may go to try to retest the previous Fibonacci level, which is now as a resistance. Oil managed to recover on Monday as Saudi Arabia said that it will reduce crude sales in December, and there is speculation that the oil exporting countries and their allies will reduce output in 2019. This news may lead to a minor recovery of oil and help oil to retest resistance. However, the general picture still looks negative for oil. There is a lot of supply at this market, and it looks like US sanctions on Iran won't really work completely. So for now, the general market for oil remains bearish, and we think that any recovery will be met with substantial resistance for this commodity. So, dear traders, thank you for your attention. I hope that you liked this video, and if you did, press thumbs up and subscribe to Liteforex YouTube channel. In the description to this video, you will be able to find a link for a demo account at Liteforex, so that you will be able to test the trading conditions of the company and well, start trading with Liteforex and become a profitable Forex trader. Thank you for your attention, and until next week.